Inflation slows, but don't expect any cuts in rates just yet. Good news for travellers, with Flight Centre forecasting a drop in airfares and hotel prices, and Apple abandons its quest for a driverless car. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 29th of February, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
It's actually just quite exciting to be able to say 29th of February. We don't get to do that very often.
Very, very exciting, I think. And all the stories around the place about the people who are 40 but actually only 10 and all that sort of stuff. You'd be a bit dirty, really, if you only celebrated your actual birthday once every 4 years. I mean, I'm sure you celebrate it every year, but it's not the same thing.
Well, happy birthday if you are celebrating on the 29th of February. I think it would be kind of special. Look, after the show, Sean, you have an interview coming up with Diana Messina, who is the Deputy Chief Economist at AMP and, of course, one of our favourite economists.
Indeed, she is. We talk about yesterday's inflation figures and what it means for interest rates, whether or not the Reserve Bank will cut rates anytime soon. Great chat. We also go on and talk about important things like labour markets and what's going to happen to house prices and all sorts of things.
Yeah, it's a really good chat. It's coming up after the show, and that is the main story today. The annual pace of inflation has slowed to 3.4%, and while it is heading in the right direction, Sean, economists think there's still a way to go before homeowners can look forward to some interest rate cuts.
Yes, the Australian Bureau of Statistics monthly inflation indicator was lower than forecast on the back of weaker goods inflation, but the all-important services inflation remains high. In January, services inflation came in at 3.7%. Rental prices inflation was unchanged at 7.4%, which is very elevated and reflects record low vacancy rates and strong rental demand. That is pushing up that 3.4% figure. At the other end of the spectrum is holiday travel prices, which were down by more than 7% over the year to January. Consumer demand has slowed, helping to reduce airfares and accommodation costs. One item I noted, Michael, lamb and goat prices are down 21%.
Goat prices?
Goat prices. Who knew?
I'm amazed that goats are something that the ABS measures.
Well, lamb and goat prices combined.
Well, I mean, clearly there is at least one goat in there that they've measured in order to be able to say lamb and goat prices. Right. That's amazing.
In unrelated news, Federal Treasurer Jim Chalmers said annual inflation is still too high, but progress is being made. Now, remember, the January figures only include about 60% of the basket used for the quarterly inflation figure. That's the one that the Reserve Bank really considers when setting interest rates. It does not survey many sticky services components, such as dining out, medical services, transportation, that type of thing. And given petrol prices and electricity prices have risen, inflation may actually step up a gear next month, or at least the February reading may actually step up a gear. But the overall trend is down, and yesterday's figure will buoy those hoping for a rate cut later in the year.
So the Reserve Bank Board won't be cutting rates when they meet in a few weeks' time?
Alas, no. The cash rate is likely to stay at 4.35%. At least it's not going up. In fact, markets have priced in a cash rate of that level for most of this year. There'll be more interest in the wording used by the Reserve Bank after it meets. Other central banks like the US Fed and European Central Bank have dropped their tightening bias on interest rates, but the Reserve Bank hasn't. In fact, it has a mild tightening bias, which is something that we talked to Diana Messina about in the interview after the show. Many economists are hoping that mild tightening bias in wording might change next week, which is the first step towards cutting rates.
All right, let's look at local markets. How did they perform yesterday?
The S&P ASX 200 closed down just a couple of points to 7,660 points. Consumer staples and telcos were the laggards, while tech stocks did best. Now, it was all about companies going ex-dividend yesterday. We've discussed this many times. It's the day, the cut-off day. If you own a share and you want to get the dividend, if you owned Woolies yesterday, for example, you would get the dividend. If you own Woolies today, you won't get the dividend. Hence, share prices fall when they go ex-dividend. And that's what happened yesterday. So Woolies was an example. Telstra was down. Fortescue Metals was down about 5% on the back of them going ex-dividend. Same for Bendigo and Adelaide Bank, Beach Energy, a bunch of companies. Broadly, the banks, the big miners and the retailers all tended to be lower yesterday. Xero was a standout, up more than 4%. Shares in APM surged 13% after the company said private equity suitor CVC had revised a non-binding offer valuing the employment services company at $1.2 billion. Worst on the day was transport services company Kelsian. It was down 12% after it released its results. And Michael, I have a special stock just for you.
Oh, go on.
There's a listed company called Drone Shield, DRONESHIEL, Drone Shield. And yesterday it reported its first ever profit, sending its share price up 14%. It's not on the top 200. It's a smaller stock. But its most popular product is a drone gun, which fires signals directly at drones, basically forcing them out of the sky. So Drone Shield's technology stops drones from communicating with controllers. See a fly, they signal at it, and off they go into the ocean or wherever they are. According to the Financial Review, the $500 million company has benefited from increased defence spending following the use of drones in conflicts in the Ukraine, the Middle East and the Red Sea. Airports are using them, stadiums are using them, prisons are using them. Pretty cool.
Sean, there's two things I love about that story. Number one is the fact that even though this is a podcast, and no one else can see this except for me because I'm right with you, you were there actually miming shooting down the drones.
I had a lot of hand action going on there as I was doing it, yes.
Yeah, it makes you feel better. It's kind of fun to do that. And look, I love this as well because Drone Shield is a fascinating company and it's been probably 18 months or more.
Yes,
we spoke to Oleg Vornik, who is the CEO of Drone Shield, and he kind of took us through all of this. And we kind of started with kind of the fact that we talked about drones kind of delivering pizzas and all this kind of stuff and delivering groceries and that. But really kind of there is a much more kind of almost a sinister side to them, and that really that is what the company is focused on, preventing and limiting the risk associated with all of that. I'll put a link in the show notes to that interview because it is well worth a listen. It was a great chat that you did. It was back in 2022, August of 2022, I think it was. So I'll include that, but fascinating update. And thank you for including that just for me.
That's what its share price is up about 140% this year. Now, we're not an investing podcast. We're not recommending anything here. But this year alone, Drone Shield's share price is up 145%.
That is huge. That's huge. International markets, what's happening?
Well, oil fell after a two-day gain as signs of higher US inventories vied with expectations that OPEC Plus will extend supply cuts. Gold is up a bit. Cryptos, including Bitcoin, are holding on to their recent gains, and the Aussie dollar is somewhat lower at 65.2 US cents. Also, yesterday, the Reserve Bank of New Zealand left the cash rate on hold at 5.5%, in line with market expectations. It maintained its hawkish stance, with inflation remaining above target.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, Labor's revamped Stage 3 tax cuts have passed the Senate, meaning 13.6 million taxpayers will get more take-home pay from 1 July.
Prime Minister Anthony Albanese called it a huge win for taxpayers. No mention of the backflip on the election promise. Of course, the government's been pushing the line that the changes reflect different economic circumstances to those 5 years ago when the original legislation passed. Under the new rules, those earning taxable income of $40,000 receive a tax cut of $654. In contrast to receiving no tax cut under the original design. Someone with a taxable income of $100,000 will get about $2,200 back, about $800 more than expected. But individuals earning $190,000 will get $4,500, which is about half of what had been originally legislated.
And just staying in politics, the Prime Minister will be invited to the NATO Leaders Summit for the third year in a row.
I reckon he loves these summits, Alba, don't you reckon?
Oh, I mean, fantastic photos. And look, that's actually probably trivializing it, just assuming that you do it for the photo ops, considering there's a lot of kind of significant conversations and kind of very meaningful kind of meetings that take place. But, of course,
that photo op.
The photo ops, they are quite incredible.
A senior NATO official told the media that Mr. Albanese and his counterparts from New Zealand, Japan and Korea, known as the Indo-Pacific Four, will all get an invitation to join the alliance's 32 leaders at their 75th anniversary summit in Washington in early July. NATO is keen to work with Australia to better understand the strategic threat from China, even though NATO's remit doesn't really extend to our region.
Flight Centre has recorded its second strongest start to a new year in about 4 decades. Wow, and it's upbeat about domestic and international airfares falling later this year.
The travel company's underlying earnings almost doubled for the 6 months to December, though the result was lower than expected, and Flight Centre's share price ended the day down about 4%. The company said after 4 years of disruption and then a gradual recovery, 2024 is set to be a watershed for travel. Boss Graham Turner reckons airfares will come down about 9% in the next 6 months, saying increased capacity from Turkish Air, Singapore Airlines, Delta and United had forced prices down more than 10% during the December quarter. The improved result reflected solid demand for leisure and corporate travel, and things had kept improving in January and February, Turner said. He was also upbeat about the current 6 months, given the sector is only at about 70% of pre-COVID volumes in the first half. Just before I leave Flight Centre, you know, you have a Super Cheap Auto is one of your favourite brands because of this customer service you got there.
Yeah, getting my windscreen wipers. Mm-hmm.
I've known Graham Turner over the years, not well. Last year, one of my kids, it was basically a ticketing stuff-up, a total ticketing stuff-up. And I actually got in touch with Graham Turner because we had done it via a subsidiary of Flight Centre, and he put someone onto it. And the service we got from the group, not just Flight Centre, but they've also got some of the lower cost subsidiaries, was fantastic.
It would be a really hard thing to deal with. If you're in kind of Flight Centre, you're dealing with so many other parties that you have very little control over in terms of the airlines and all of the accommodation, and you're there trying to kind of manage that in the middle. Got to be a tough job.
Yeah, they were great. And that's exactly right. It wasn't their fault. It was, in this instance, I think it was the airline's fault as much as anyone. But, yeah, they just stuck at it for us.
How good is that?
Yeah.
The co-chief executive and founder of Mexican-themed restaurant chain Guzman y Gomez says only McDonald's is doing better in Australia in terms of customer patronage.
Yes, Stephen Marks, his name is, a great enthusiast. He wants 1,000 Australian stores. It currently has about 209 outlets, of which 185 are restaurants, and it wants to grow its numbers across Japan and Singapore. It also wants to grow its US footprint to about 15 stores, which, the ones open there at the moment are clustered around the Chicago area. Guzman y Gomez isn't listed. There's been an on-again, off-again float for ages, it seems. It appears that there won't be a float this year, perhaps at the end of the year if there's an opportunity there. Yesterday said for the December half, losses were about $4 million on the back of a 30% jump in revenue. Mr. Mark said the Mexican-themed chain was close to recession-proof, as proved by its continued strong growth, despite cost of living pressures across the community, according to a report in The Australian. Now, you can't ever say that Stephen Marks isn't an enthusiast for his company. He, as you mentioned, said that only McDonald's is doing better in Australia in terms of customer patronage. May or may not be right. McDonald's has about 1,100 stores in Australia. Subway's at 1,200. There's more than 700 Domino's. So Guzman y Gomez still has a way to go.
Shares in financial services group Perpetual fell 2% yesterday after it reported a lower than expected first half profit.
Plenty going on at Perpetual. Last year, it acquired rival fund manager Pendal, and then its largest shareholder, Washington H. Soul Pattinson, pushed the board to consider a breakup of the business. Now, that could involve the sale or demerger of the corporate trust business, which is considered the jewel in the crown, from the wealth management and asset management businesses. Analysts expected an update yesterday, though there wasn't one. Instead, Perpetual said the review is progressing.
Neuron Pharmaceuticals' share price fell 11% after sales of its Daybue drug, that's Daybue drug, in the US were below expectations.
Now, this is the company whose drug licensing partner in the US, Arcadia, was targeted by short sellers about a fortnight ago, triggering a fall in both Arcadia and Neuron's share price. Neuron's stock is now down almost 20% over the past couple of weeks. Otherwise, engineering group Worley swung to a profit help by a jump in its professional services income. Its share price rose 3%. NextDC's share price jumped more than 13%, even though the data center owner reported a net loss over the half. Now, the company is spending lots of money on new data centers and believes it can capitalize on the AI boom, and a bunch of investors agree.
And finally, Sean, one more before we get to international news. New restrictions on vapes come into law tomorrow as the government considers an even greater clampdown, including possibly a total ban in coming months.
The government has already banned the importation of single-use vapes, and from tomorrow, new rules come into effect, including an importation ban on all vapes without a licence. The Australian Border Force and the Therapeutic Goods Administration has seized more than 360,000 vapes, worth almost $11 million since the new rules took effect. Yesterday, Health Minister Mark Butler indicated he wanted to see the closure of vape stores. 9 out of 10 vape stores around Australia are located within walking distance of schools. Easy to see who the target market is. And Butler said the government would introduce another tranche of legislation, but needs the support of the opposition. He also revealed that the government has $250,000 allocated to partnerships with Spotify and influencers to lead the anti-vaping campaign.
Okay, turning to international news now. And European military heavyweights, Germany and Poland, the United States and NATO, have said they will not be sending troops to Ukraine after French President Emmanuel Macron raised the possibility earlier in the week.
This is a very serious story, but it does sometimes make you laugh a little bit in global politics when someone comes out and says something, which seems to be this case, Emmanuel Macron, and everyone else goes, oh, no, we wouldn't do that. And that seems to be what happened here. The head of NATO said the US-led military alliance had no plans to send combat troops to Ukraine after other Central European leaders confirmed they too would not be providing soldiers. In the US, National Security Council spokesperson Adrian Watson said President Joe Biden has been clear that the US will not send troops to fight in Ukraine. Of course, this was after Macron's comments that maybe NATO would provide troops. Now, Moscow came out and warned that a direct conflict between NATO and Russia would be inevitable if the alliance sends combat troops. Everyone's jumped in to say, we ain't doing it.
And finally, Sean, Apple has abandoned plans to build a self-driving car after a decade of trying. It's really putting the future of the world's second largest company firmly back into tech gadgets rather than vehicles.
Yeah, and I think that's what it has done best. Apple has told employees it's winding down its car project and has reassigned some of the 2,000 staff involved in it to artificial intelligence efforts. So the future for Apple is no longer about a $100,000 self-driving car, but instead it's all about AI and things like the very well-received Vision Pro headset, that type of stuff, all those gadgets. The leaked announcement triggered a surge in Apple's share price. Apple still earns more than half of its revenue, about 58%, from the iPhone. Wearables and accessories contribute about 10%. You know, the Apple Mac is now down to just 6.5%. And I'm sure many of us first heard of Apple because of the Apple Mac. And iPads are worth about 5.9%. Anyway, the driverless car, not coming from Apple.
Oh, there you go. Up next is the Fear and Greed Daily Interview. You're speaking today with Diana Messina from AMP.
All about inflation, what yesterday's numbers mean for interest rates.
It's a cracker of an interview. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 29th of February, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.